Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. I love when guests come on for a second time, and I love even more when guests come on for a third time. This lad is one of the GOATs of the crypto space, and the first two times he brought the noise, he brought the heat. He had some hot friggin' takes and was shooting and is shooting about 99% on all of his takes. Today we have the one and only William Quigley on the show today, cryptocurrency and blockchain investor. He has incubated and invested in more than 30 Bitcoin, blockchain, and crypto-related investments, and co-developed the first crypto derivative used to trade pre-sale Ethereum. He co-founded a company you may or may not have heard of called Tether. Ever heard of it? The big dog USDT. GoCoin, co-founded Wax. He's pretty much done it all and made some notable investments in Coinbase, Kraken, Bitfury, Authy, ChangeTip, and Circle. Always a pleasure having you on, William. Welcome back to the show, my friend. How you doing this morning?
Good, and thank you. Happy to be here again.
Pumped to have you on for round three, mate. Last time we had you on, again, third time having you on, you had some hot takes, which I love. You've let it fly. You don't give a shit about what people think. I went through the show notes on the first couple epis, and you pretty much called everything. 2 years ago when you first came on, you did say Bitcoin would hit 100. It hit 100. You did say last time I had you on that if Trump would get in, that he would pretty much deregulate a lot of things and that the market would move. The SEC would be approving a bunch of stuff. That has happened as well. You did a great job of explaining why Tether has no peg, which a lot of people think has a peg, but why Tether has no peg. And you also said that Tether, the company you co-founded, would continue to pretty much just absolutely dominate every other company and product in the space. The only thing that you said that hasn't come true yet, and Trump sort of said no to this, was that every country will adopt CBDCs. However, we just had the Central African Republic yesterday launch a friggin' meme coin that almost hit $1 billion on Pump Fund. I think to start this pod off, I'm just going to throw the ball over to your court. How crazy is 2025 been so far? And what do you think about the overall market, whether it's crypto, whether it's macro, whether it's stocks? Just give me your TLDR, your 2 cents in the cookie jar.
Okay, I would say so far, maybe through the end of January, I would have said it's maintaining its path that I anticipated as part of the every 4-year post-halving bull market run for crypto. It did all the things I expected it to do. There was kind of a lull period post the halving in April 2024. Then we had 2 capitulations, one in August, one in big capitulations, and one in September. That to me is an indication that we're on the traditional path, because that's what usually happens. And then in Q4, Bitcoin started to go up. We cracked 100,000. And so I was feeling pretty good. Now we're, it's mid-Feb almost. And at this point, I would have expected Bitcoin to be closer to maybe 125,000. And it's really bouncing around between like mid-90s and a little over 100. Nothing to worry about just yet. But if we are going to do what I've anticipated, which is about 300 to 350,000 Bitcoin before the end of 2025. By April, we need to be at about 200,000. And that's 2 months away. Maybe that'll happen. Bitcoin has an ability to rally very quickly, right? You can double pretty easily.
When it rips, it rips.
3 months, right?
Yeah.
And so I'm waiting to see. I guess you might call this a hot take, which is I don't believe much of what we might call good news or bad news in the crypto space is nearly as relevant to price movement as is just the cycle we're in. I think these cryptocurrencies are very cyclical driven. They appear to be driven a lot by post-halving movement in Bitcoin, because most cryptos are correlated very strongly to the direction of Bitcoin, 80% plus correlated. And so where goes Bitcoin goes everything else. Probably aside from Bitcoin, I would say the coin that has the most focus on it is, other than that, is Ethereum. And the thing about Ethereum is, since it's smaller in market cap and since it's doesn't trade as much, we would say it's more risky to hold. And you need to be paid or compensated for that risk. And historically, Ethereum has more than 2x the increase that Bitcoin has seen. If Bitcoin went up $1, Ethereum went up 2. If you look at the pre-halving prices of Bitcoin and Ethereum, and my estimate of where Bitcoin was going was based on the fact that pre-halving it was about 65,000. And I thought in this bull run, the 2024, 2025 bull run, it should go to about 300 to 350, call it 5x. So Ethereum needs to 2x that, so 10x. Well, Ethereum was running 2,000 or so dollars an ETH in pre-halving in April 2024. So it would need to kind of be close to 20,000 from where it is today, which is 3 or something. It looks like a long way to go from here. And what's curious to me is, let's say the cycle ends and Ethereum or Bitcoin does hit 300,000 or close, but Ethereum doesn't do much. Maybe it just hits its previous high, which was around 4,800. I think that would be very bad for Ethereum long term, because you're basically then saying, I'm getting much more volatility and risk in Ethereum, but I don't get the upside that I get in BTC.
Upside, yeah.
By the way, I don't think there's much the Ethereum Foundation can do about this. I think it's very cyclical how it works. And so it is something to be noted. Perhaps if meme coins had been concentrated on Ethereum versus, let's say, Solana, Ethereum would have had a nice run, right? So it's way too early. It's still only Feb, but I'm very carefully tracking what's going on with Ethereum. And then, like I said, as far as Bitcoin goes, I've told you what I think. I shouldn't say I think it's going to hit 300 plus. What I would say is, if it follows the past patterns, then it should hit 300. I don't know if it will, but it should. It's only 3x from here to get there, which for Bitcoin is not hard, right? It can do 3x in a year. We also could see potentially, when the Trump new regulatory environment starts to take hold in the US, maybe that will spur a huge increase in adoption, because we haven't talked about the regulatory changes, but Trump is the most pro-crypto president we've had. And at least right now, it looks like he wants to implement a lot of very pro-Ethereum policies, or I should say crypto policies. And it's really up to Congress to do this, but they've dropped the ball. So he's going to push. I don't think it will just be executive orders. I think his working committee that he's launched to study crypto and then come up with policy recommendations, which, by the way, he wants those recommendations by this summer. So he's not waiting around. If we get to a point where the U.S. Congress is looking at those things favorably, then we could see real crypto legislation before the end of the year. And maybe once that's in effect, you'll see a lot of price movement. A lot of people have said to me, look, we have all this great news in crypto, but the prices haven't done much, which is true. But crypto, sometimes nothing happens until the event occurs, as opposed to the news. You know, stocks trade on the news. Crypto often trades more on the event actually occurring. And so if that's the case, maybe we get late rallies in 2025 when some of these new policies are codified into U.S. law.
Well said there. A couple different points I want to get on. You touched on Solana versus ETH, and of course in regards to meme coins and whatnot, but I just look at like the daily inflows of Solana, like how much USDT or USDC is being printed on Sol and not on ETH, and the inflows where the Tether is printed, the Circle is printed. It's not going through Ethereum. I remember back in 2021, 2022, I would go on Twitter and I'd see like, whale alerts or whatever big account, the news accounts, right? Whether it's cryptonews.com, getting a breaking story, you, Paolo, the team at Tether, hey, we're printing a shit ton of of USDT, and it's going straight to the ETH Foundation to spread across the board, blah, blah, blah. It's just not happening anymore. And then I look at the volume where it's like every single day, the chain with the biggest volume is Solana. And it's like all these ETH maxis. And then I think about the usability, and I'm a big, as a non-crypto whale and as a bit of a degen and everyday user, the dozens of friends that I've onboarded, every single one of them comes back to me, William, and goes, Maddie, Sol is way more fun. It is so much easier. It's better to use, the UX, everything, the UI. It's just like, I feel like that's got something to do with it too,
I totally agree. In some ways you could say Ethereum was, it was an experiment. It was the second blockchain to attempt to have an intelligent layer embedded in it, but it got the most traction. And then, basically ICO bubble came around in 2017. People realized, I can make ERC20 tokens on Ethereum easily. So Ethereum had a reason to exist. And I don't think there's been anything groundbreaking since then that's made people say, this is great. And the fact is that something that crypto people finally figured out in 2020, 2021, which is the way that Ethereum clears its queue is, a surge pricing model like Uber. You want to be at the front of the queue, well, you pay more. And given its limitations in terms of throughput, you could wind up paying a lot. And that, of course, the whole fixation on high gas fees became a real thing in 2020 and 2021. And I don't think Ethereum ever recovered from that.
Yeah.
If you even look at staking, so Ethereum had been, gradually going up to about 25% of supply. Maybe it's 27, 28, I don't know, but roughly has been staked. But, since November, about $1 million, $1 million ETH have been unstaked. So whatever that is, 1%. But it's not so much that decline as it is the fact that it's just not growing. So I think during a bull market, when ETH is being unstaked, I would say that's not a great sign. Everyone wondered how much is going to be staked. You have some chains where 60 to 70% of all tokens in circulation are staked. Ethereum is, 25, 27, something like that. It says to me that, well, one, people don't like the yield, right? The yield right now is probably 3% annualized versus more than double that for Solana. So I think people don't like that. And maybe they're not long-term holders right now during this crypto bull market. Maybe they want to convert it into something else. So that's where I see them.
Also, a crazy amount of open interest on ETH as we are recording today in mid-Feb. Just, I think the highest ever on the chart that I saw this morning. But I want to jump into stablecoins. After having you and Paolo on the podcast a couple of times each, and just obviously everyone else in the space, but you guys really sort of just drilled the importance of stablecoins into my hard head. And I still think to this day, William, the two major use cases in crypto by a country mile are centralized exchanges and stablecoins. Centralized exchanges because it's what brings, the average, not even the average user, whales, institutions, you name it, that, every institution in North America pretty much uses Coinbase Prime to custody their assets. But you have the centralized exchanges, which act as that avenue from TradFi to Web3, and you have stablecoins. I was in Argentina for 2 months in Q4, November and December. I got to see the power of stablecoins firsthand, like the amount of businesses that literally accept Tether. They have beautiful, big, friggin' green Tether signs. These are ma and pa shops selling choripans and empanadas and asados, right? And you can roll up and you literally just tap your phone, boom. And that's just on the small sort of micro scale. Then you have the macro scale. Both times I've had you on, I asked you, did you ever think that after creating Tether that it would be as big? And you sort of said, yes, we knew it would be big, but not to the extent that it is. Mm-hmm. I'd love for you to just, before we get into the power of stablecoins and how they're going to continue to grow and grow and grow, especially in 2025 as regulatory framework continues to get involved and to be introduced. But just give me your sort of, your thoughts on Tether right now, how incredible it is. Paolo released the 2024 update a couple of weeks ago. I mean, I think it's like $60 million per employee, or sorry, yeah, $60 million in rev per employee. Like literally one of the, not even most valuable companies in crypto, but one of the most valuable companies in the world. Just an incredible story. How cool is it to be a part of? And just give me your thoughts on Tether present day.
Yeah, I would say like many things at the time, this is like, 2013, 2014, nobody really was thinking about what was needed in order to get a lot of people trading. And unless you were trading, and there weren't a lot of serious traders at that time, a few thousand globally, you didn't understand that the only way to calculate a profit on a trade is for one side of that trade to be stable. It needs to be indexed to however you calculate a profit.
Yeah.
Because if both sides of the trade are floating against what you consider your like notional baseline, then did you make anything, right? And when people used to trade, it's not really done much anymore, but on exchanges before Tether, people would trade Litecoin for Namecoin or Doge or Bitcoin, and you would sort of have to go, well, I got more of this other token, but the other token's gone down in value. So did I make
No
anything?
baseline. No baseline.
And right, you can't do it. And so that part I thought was always missing. As I've mentioned to you before, there was almost nobody in crypto who thought the notion of a stable token was necessary. And for anybody, me and my partner had been doing a lot in the payment space for years because we were running a video game virtual item marketplace. And the way those marketplaces work, people buying and selling video game virtual items, is they're global, and you need access to lots of different regional payment mechanisms. Otherwise, people can't cash out. And so we were constantly having trouble with that. And of course, other than USD and a few other currencies, but really USD, it's really hard. If you get below the euro, the yen, maybe like, a few other currencies, the rest of the world's currencies are mostly garbage.
Yeah.
And, the volatility vis-a-vis the dollar is huge. And so we kept thinking, wow, what if everybody could have a synthetic dollar? Like, what would that be worth? And it wasn't until crypto came
Would that be
along.
worth, what is it, $800 billion?
Yeah, right. Until that came along, and for your audience, I assume a lot of them are crypto people, but for me, what makes a blockchain-based system so attractive, and this could extend to anything on that, including, of course, things like NFTs, is the ability for me to send to you something where you, the recipient, get it and know instantly, with no effort and with certainty, that whatever I gave you is genuine. Up until blockchains, that didn't exist in the universe. It just didn't exist. You get currency, you don't know if it's real or counterfeit. People would always say to me early on, well, gold and diamonds. I'm sorry, but unless you're a specialist and have an assay test on that gold,
I don't know.
like, does anybody have their neighborhood assay guy who they go to? It's you have no idea, right? And so what that led to is a system where you had trust, but there were kind of bilateral relationships. You have a relationship with Amazon, right? And when you send money to Amazon, or they send stuff to you, you feel comfortable. Here's the part, though, about capitalism that might be lost there. The reason you feel comfortable interacting with Amazon is because they have a brand, and that brand has been based on hundreds of billions of dollars of transactions where they didn't screw people over. Now you say, well, that's great. That works. Yes, but there's a cost to that. So you, as the customer, are paying a toll, a tax for getting the value of that brand. And of course, that's why companies want brands. They want this emergent experience that ultimately causes you to say, I prefer brand A over brand B.
Yeah.
What's magical about a blockchain-based system is if you really could distribute all the work to these anonymous people and compensate them, which is the clever trick of the Bitcoin blockchain. You're compensated with money or tokens that are made by doing the work. Then there is no central party that needs this brand and therefore charges you a big toll. So that's the beautiful thing about back to stablecoins is you have these stablecoins using a blockchain, and that blockchain provides you with all that assurance that they're genuine, and you didn't have to put in any effort or time to figure it out. And therefore, it's going to be, in my mind, this is why I say I have high hopes that ultimately all the world's global economies will tokenize their fiat, because it's the best way for you to accept some form of payment. It can't be reversed, right? So payments get reversed all the time. In the e-commerce world, if you're running an e-commerce business, you know this, these are called chargebacks.
Oh, nightmare.
Somebody gives you a stolen credit card, you take it, you ship them their goods, and then the credit card company tells you it was stolen and they take the money out of your bank account. So I actually believe the most powerful thing that President Trump could do would be to tokenize the US fiat and allow the world to use dollars. And this probably is not common knowledge among everybody, but it's virtually impossible for a non-American to get a bank account denominated in US dollars. And just as it's virtually impossible for an American to get a bank account in euros or even Canadian dollars, because of the way regulations have come about, they want you to be a resident of that country, and a lot of KYC and anti-money laundering mechanisms that they put in place. And so essentially most people can only have the native currency of wherever they're located. But the reality is that in our global economy, cross-border transactions are the fastest growing segment. And you're allowed to buy something. I'm allowed to buy something in Germany and pay them in euros. But what happens is there's an intermediary who goes and takes a currency conversion fee for doing that.
It's not peer-to-peer. It's not peer-to-peer.
And that's always hidden.
Yeah.
Something I've often said to people is, you think that little 1 or 2 or 3% transaction fee you pay to use PayPal or some, TransferWise to go send something cross border, that's not the relevant part of their income. They're making the money by giving you a worse currency conversion rate than the one they get.
Yeah.
And it's invisible to you. And that's why if we could get everybody using stablecoins, you would never need to actually convert the currency.
Yeah.
You could just keep it on a ledger or whatever in its native form. It's also why I think there's a lot of financial institutions who don't like the idea of it, because I would guess, I've done the math a few times, it's blue sky stuff, but in a $100 trillion global economy annually, I think there's about $1 trillion worth of currency conversion costs that are borne by consumers and by businesses.
I used to work for one of the biggest FX boutiques in the world, Monex. We used to print money like you've never, hundreds of millions of dollars. You're going to company X who does 100 mil in rev a year, and if you can snag even just 1% of that, 100 mil, there's a mil, and you're getting more than that. Like you're getting 3 or 4 off them because they're domiciled in United States. They do business with Canada. They do business with Europe. They do business with China. They got a shit ton of currency. One thing I'd love to talk about is, and we do need to jump to a quick ad read soon, but before that, this is a point I think a lot of people fully haven't grasped. The United States is sort of indebted to you guys, in my opinion, because as crypto continues to grow, like Tether is, after Bitcoin, I think Tether is the second, on the chart, whatever, it's 4th or 5th on the day, 3rd, whatever. It's the 3rd biggest company in the space, but
but the most traded crypto.
Exactly, by a country mile. And it's like, you guys could have said, hey, we're going to use the friggin' euro, and it would have been euro instead of USDT. Like, I genuinely feel in the long run, if the USD, and I do feel like Trump will do his best to make sure that it remains the global reserve currency and the most powerful currency in the world, but I feel, and I could be out to lunch here, William, but I do think that you guys did them a huge fucking service, in my opinion, pardon my French, and that and the average Joe still hasn't really grasped how big of an impact you've had on the American just sort of dollar and the crypto market as a whole.
Yeah, I like to be humble, right? But in this area, I mean, you know, it sounds maybe not humble to talk about the benefits of stablecoins and
Huge. It's
Tether was the
massive.
first. But if I look at the evolution of money, I would say the greatest innovation, and not necessarily for all the people using it, but for the people issuing it, was the creation of fiat money. The ability to get your citizens to accept a currency backed by nothing, right? That's impressive. And I would say the invention of fiat money is the maybe greatest innovation in money. I believe number two will wind up being the tokenization of money.
Easily.
There's no counterfeiting, right? That alone is enormous, right? I mean, forget about all the profit that North Korea makes, you know, with their incredibly sophisticated machines to replicate, you know, US $20 and $100 bills. Well, sorry, once the money is tokenized and on a blockchain, there's no counterfeiting. That alone is incredibly cool. And as we've already said, there's no need to ever convert it. You can just keep it in its native form. These things are powerful. And as the rest of the world begins to understand it, anyone who trades crypto knows that stablecoins are essential. But as the rest of the world wakes up to what else can be done, it's going to be powerful. And unfortunately, I guess, a lot of people started hearing about what became known as a central bank digital currency, and which is just the governments issuing their own stablecoins.
Yep.
And because the governments who were talking about doing this did a poor job of discussing why it was valuable, what you had was a lot of people saying, well, there must be some evil reason for it. And, oh, they're going to monitor everything we do with the money. They're going to turn off our access to it. And I just want to say to people here, the reason I don't worry about that is because it's already done. The day we digitized our money, governments around the world have the ability, and they do, in fact, look at everything we do with it. You know, banks are required to file all these forms. What's Joe doing with his money? What's Mary doing with her money? The banks constantly calling you. What's this wire for? They are looking at everything. All the credit card companies, they all have given access to governments, and not just central governments, provincial level governments, city governments. Heck, a random police department can write a letter to any credit card processing company without even a court order, and these companies wrongly will just turn over everything. So that fight has been lost, right? And
yeah, you can't really hide much.
You can't, right? And so you might as well get the benefit of tokenized currency if the downside of kind of being able to more easily track digital footprints has already been embedded into everything we do. So that's my reasons for saying, yeah, don't worry about that as much because it's already done.
Yeah, well said. William, you're on a roll here. Quick break and huge shout out to PrimeXBT, longtime friends and longtime sponsors of the Crypto News Pod. We love the team at PrimeXBT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. PrimeXBT is also running an exclusive promo for listeners of the Crypto News Pod. Use the promo code CryptoNews50, that is CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. I always apologize for the listeners who listen to this in 1.5 or 2x speed. Whenever I do the ad read, I'm talking way too quick. My apologies, but we are running tight for time. Back to the show with William. A couple more things as we are tight. Let's jump into the policy train here. A couple things that you can touch on. I'll sort of throw them out and you can sort of pick and choose which ones you'd like to go at. The U.S. Bitcoin Strategic Reserve. I know Trump talked about the sovereign wealth fund. Excuse me. I think it's brilliant. Why not do it? It just sort of gives you that super powerful arm. I think it comes down to what lads or lasses do you pick to run it. If it's going to be a group of 4 or 5 people, like they sort of said it will be, you got to obviously pick some big dogs who have huge experience. Will they buy Bitcoin with that? Will they put it on the balance sheet? That's sort of one, and just the sort of importance of the U.S. Strategic Bitcoin Reserve. If the U.S. does it, I don't see a world in which Bitcoin doesn't blow the top off. Every single country is going to follow, probably except for Canada because we're dumb as hell. And sort of the second big point I love to touch on is just the banking reform. I forget the law that was passed a couple of weeks ago, but the U.S. banks got to stop fucking with, crypto people and closing accounts and all that kind of nonsense. I think this happened to you in the past, but just 2 big points I'd love to touch on. The ball's in your court, whatever you'd like to throw your 2 cents in.
Okay. So I will tell you on the US, Bitcoin reserve, or this like sovereign wealth fund for the United States, I could go both ways with it. On the one hand, the US has this privilege held by really no other country on earth, where it has seemingly the ability to create an infinite amount of money. And so if it needs something, it doesn't have to tap into an investment pool to do it, which other countries that can't issue debt denominated in their own currency do. So that makes me think, well, what actually is the purpose of this thing? We have this retirement program in the United States called Social Security, and that is a Ponzi scheme by definition. I'm not even being critical. It is. People pay into it each week or every other week, and then the money that was paid in gets taken out and sent to people who are retirees and have a claim on it. And so there's no investing going on. And this is, trillions of dollars of liabilities owed to people into their retirement. I'd almost feel like I'd rather we spend time on like fixing this program, because by about 2034, receipts will be insufficient to cover outlays. And, there's a bunch of stuff you can do. You can increase the taxes on the younger working people so that receipts go up. You could theoretically cut the benefits to the retirees. Any politician understands that doing that would be hard because those retirees would mass and try to vote those people out. So I'd prefer we put more energy into that. But if there was a sovereign wealth fund and the sovereign wealth fund decided to hold some Bitcoin and it was a steady buying of that, yes, it would have a dramatic effect of increasing the price of Bitcoin. If you just look at Michael Saylor over at MicroStrategy, he's now acquired about 475,000 Bitcoin for a combined $30 billion or so. Relative to a multi-trillion-dollar asset, that's not that much, but it takes very little fiat-based buying to inflate the prices. So sometimes I wonder if MicroStrategy hasn't been the primary driver of the price of Bitcoin from 65 to 100,000. We'll see. And so that, he's the only obvious one who continuously buys, right? And there used to be, I had a rule of thumb, for every dollar worth of new money coming into the crypto system and buying Bitcoin went up $50. It seemed like that was about the ratio. Maybe it's 1 to 10 now, I don't know, but it's very high. There's a very big amplifier with new money coming into the system. And so when it comes to sovereign wealth funds and them buying crypto, would I like to see it? I'd love to see it. But you could also simply have, which people have talked about, the various U.S. law enforcement agencies not sell crypto that they confiscate from bad guys, just build that up in a reserve.
Yeah.
The U.S. probably was the largest holder at various times of Bitcoin, just from seizures, and they typically sell it. And I've always believed, by the way, that they sell it when they see Bitcoin going up. I always felt like they were like trying to drag it down. So that's my thinking on the sovereign wealth fund part of it.
I love it. Look, this has been an absolute treat of an episode. Any other last minute things? I mean, heck, you work for, not work, but you are at the top and have investments in tons of companies, Tether, Wax, you name it. Anything popping off on the news side that you'd like to tell us about before we let you go?
I would just say that one big difference between this cycle, the 2024-2025 post-halving bull run, and others is we have not seen a big new innovation that has driven crypto prices up. In all the previous ones, we've had some new development that drew a lot of excitement and then I think helped propel crypto higher. This time, we've not really seen much, which I think is an indication that the harder things now are what's available to us. We've done all the easy stuff. It was like Internet 1.0. Oh, I'll put up a bookstore, or I'll open a travel site, or I'll put music online. Those were sort of more obvious. And then it became more difficult to figure out what new thing you could contribute. I think I would like to see more development work being done, maybe less on the meme coin side and more on the real software development to actually harness the real values of blockchain and smart contract technologies. And I think that would be very helpful as well for dragging in more people. Also, I would say, people should seriously look at the Bitcoin and the Ethereum ETFs. They're very easy now, at least for US people, to buy into and exit if they want Bitcoin. The ETFs have made it really nice. And, there's decent volume, 700 million to $1 billion a day in the Bitcoin ETFs, about half that usually for Ethereum, but still pretty good volume.
Yeah.
And that's probably the easiest way for people to get a hold of their crypto.
Well said, folks. Great way to end that. Less meme coins, more software dev. One last point I'd just love to throw in. The last couple big launches, you had Abstract, which had, I think hundreds of millions in VC, pretty much dead already. No offense to the Abstract team. I think the UX and UI is great, but nothing happened there. Chain launched last week. That was touted as one of the biggest ones. Nothing. The only other one that I think is coming up is Monad. I know Monad is supposedly going to be the new fastest, biggest blockchain. They got a lot of sort of clout on crypto Twitter, which is the town square of our industry. But this year we're 0 for 2. Everyone probably had penciled in that we were going 3 for 3. We're 0 for 2 right now. Hopefully we can go 1 for 3. And lastly, ETFs. I'm Canadian. I own the ETFs. I buy them. Guys, if you have IRA for the States, RRSP, TFSA for Canadians, and you want to pay lower taxes and not get taxed, just invest into it. It's a great way to get exposure to crypto. Makes life super easy. Great freaking product. And who cares if they take a small fee? It's worth not having to self-custody it by yourself.
Yeah, exactly. Agreed.
William, what an episode. Really appreciate you having on. As always, I will include everything in the show notes. Huge shout out to William and the team for making this happen. Again, guys, William Quigley, co-founder of Tether and Wax. Always love having him on. He's always dropping some knowledge left, right, and center. If you guys enjoyed this one, I hope you did. Please do subscribe. It would mean the world to my team and I. Speaking of the team, love you guys so much. Thank you for everything. And back to the listeners. Keep on growing those bags. Keep on investing in ETFs and keep on staying healthy, wealthy, and happy. Love you guys, and we'll see you on the next one. Ciao.